Hello traders, this is another edition from our video section, and this time we're covering the NIFTY Index. I keep getting a lot of requests from traders to take a look into the NIFTY Index and cover this. So I thought why not, and let's take a look at this interesting index. Now just to briefly recap, the NIFTY or the CNX NIFTY is the stock market index for India, or rather one of the stock markets for India. It tracks around 22 sectors under one portfolio, tracking around 50 different instruments. A lot of people have been asking me to do some analysis on the NIFTY index. So that's what has led me to this video. Please bear in mind that this is only an educational video, and I do not offer any investment advice. So for those of you interested, please contact your financial advisor. So this is the 100 point Renko chart for the NIFTY. This would be the starting point, and it would also mark the main time frame of interest. The key things of interest here is that we notice a long-term bearish divergence being formed, which points to a correction to 60.35. This is marked by the high and lower high, while prices form a double top pattern here. You have the resistance support level here at 85.35, which was promptly broken, and prices fell to 8,000 before a quick retest back to 85.35 and then resumed their downtrend. Right now we are noticing a bit of a reversal near the 70.35 level, and if this is valid, you could expect a test back to the 7600 levels at the very least. So the 100 point Renko chart for NIFTY is showing us that the momentum to the downside is slowing down, and we could possibly expect to see a correction in the near term to this downtrend. An interesting point to note is that between the levels of 7600 and 6400, you don't quite have any support levels here. So in order to identify this, the next step would be to look at a lower time frame chart. So here we take a look at 50 point Renko chart for NIFTY. You notice a descending triangle being formed, which with point 1, 2, 3, and we expect point 4 to be formed somewhere near the 7400 region before we can expect another pullback and then an eventual rally. Note that this is the longer term trend line, and this could potentially act as a resistance in the downturn. So while we expect a reversal near 7400, I do not rule out a test to as far as 7600. We are looking for another pullback to the downside for a higher low to be formed, and I expect this to happen near the 7185 region. Above 7635, we could see a larger correction towards the 8000 level, which marks the support and resistance. Now applying these levels onto a weekly bar chart, what we see is a head and shoulders pattern that was formed near the 9000 level and 8000 level. And this basically broke down after the support at 8000 gave way, and we see prices trading near the 7000 level. Obviously the bounce is expected at this level, and as in most head and shoulders pattern, we usually see a bounce back to retest the neckline. Notice that we have had only two minor tests of resistance near the 8000 level. Nothing as pronounced as a rally back, so be prepared for a move back to the 8000 level, and as mentioned, the 7185 might be the level to watch for a pullback to the downside. So a move back to 8000 could potentially establish resistance near this neckline support, and we could see another break lower, where prices could again retest the 7,000 level and eventually to the 6,400 and 6,100 levels. The daily chart shows us the short-term support and resistance levels. I've put in the median line here to identify what price is doing. Notice that you have a low here and another higher low here, and prices have made a high right here. So in the short term, I expect this particular gap to be filled. So you could expect prices to rally and then possibly drop back to 7,200 or 7,185 levels in order to form a proper higher low. So you would have a low here and a possible higher low here before prices can eventually move back to the 8,000 level. Now ideally from 8,000 you should start seeing lower highs being made and prices falling lower back to 7,000 level. But in the event that prices move back above the 8,000, you could potentially expect a dip back to 8,000 to establish support before prices can move higher. So 83.36 is the level to watch to the upside. If this level is broken following establishing of support near 8,000, you could easily expect the Nifty to rally back to 9,000 level. However, comparing the other equity markets in the US, especially the S&P 500 and the German DAX, a similar pattern looks to be playing out, where the equity markets are expected to pull back in the short term to make a higher low, following which we could expect to see a medium to short term rally and then a strong decline. For the S&P 500, I'm expecting a pullback to the upside towards 2020-25 region and then an eventual decline to 1600. In the German DAX, you've got the 10,000 level, following which if resistance is established at 10,000, then you could expect to see a dip towards 7,000 or 6,000 levels. So with the S&P 500 and the German DAX both pointing to stronger losses in the near-term outlook, I really don't see any reason why the Nifty should be behaving otherwise. If not more, the Nifty should be starting to decline even more strongly compared to the equity markets from Germany or the US. So guys, I hope this video has been informative and helpful for you. Once again, this video is purely for educational purposes and there are no investment advices being given out here. Please trade cautiously, and if you have any questions, feel free to comment and I'll get back to you. Thank you, and have a good day.